Welcome back to Switzerland. Now, new research reveals Australia's high corporate tax rate is not only putting local firms at a disadvantage, but it could also be hindering economic growth. A study by UHY Haines Norton shows Australia has the 8th highest corporate tax rate in the world, which is about 5% higher than the global average. For more, we're joined by James Tung, Director of Tax and Advisory at UHY Haines Norton in our Perth studio. James, thanks very much for your time. Let's kick it off by give us an idea about the tax study itself. How long has it been going? How many people do you speak to? Who do you speak to?
Yeah, thank you, James. This is a global study, part of a series we've been doing on the cost of doing business worldwide. This is a survey amongst 26 countries in our global network, which totals 86, where we pulled out stats on corporate tax at an income level of 100,000 US and $1 million US, both of which aren't extraordinary numbers when you look into the context of the Australian dollar and its strength in the global market.
And it seems the
We've been doing this series of studies for about 6 months now.
And it seems the key finding, Australia's corporate tax rate, the 8th highest in the world. Was that a surprise? A lot of people here would suggest, well, maybe not. You know, they're getting a little bit sick to death of paying tax. But in terms of a global sort of comparison, were you surprised?
Having worked in tax for a long time, probably we weren't surprised, but there is a trend, a very obvious one. Australia being 8th and the countries above us are all considered countries in which it is difficult to do business. In Australia, when you combine that with the cost of employing people, and we look at industrial relations, rent, housing, food, it does put us at a competitive disadvantage. Those neighbours around us have rates that are lower, they charge lower rates of tax, plus have lower costs of employment and things like tax holidays, tax-free zones, those sort of things. So probably not a surprise to us, but for some of the other countries it definitely was a surprise.
Who are some of the countries that have a higher tax rate than us?
Are you looking at Argentina, Brazil, Italy, Germany? Those countries are known to be expensive countries and difficult countries in which to do business, particularly the South American countries. Argentina and Brazil are renowned for being extremely difficult to do business. We do a study on just setting up branches and companies in each country, and the list for Brazil goes for probably 2.5 pages of steps to set up a company there, whereas Australia is probably 5 or 6 steps.
And so what does that mean for Australia? Does it suggest that attracting foreign investment, foreign business could be difficult? Because Australia is, you know, it's been built, if you like, largely on foreign investments.
Yeah, you make a very pertinent point there, an observation. I think people would be naive to think Australia isn't built on foreign investment. It's actually very important to us growing our economy here, and it does make it less attractive. We have a combination of clients. We have local businesses who now are forced to look to an outsourced model because of competitive pressures in the market and their customers demanding lower prices, so they've had to shut down local manufacturing operations. And on the converse, we look at overseas businesses who want to set up here, and they approach us regularly, but cost of tax, both on a corporate and personal income tax level, trying to match the package of other countries where it's easier to attract staff. And ultimately the amount of profit you make in Australia does make it difficult to attract foreign investment here at times. So they're here for business opportunities more than anything else.
In an ideal world, though, what do you do? I mean, is it as simple as just cutting the corporate tax rate to try and incentivise foreign investment flows into the country? But then I suppose the balancing act is all the usage that the government does with the corporate tax, infrastructure builds, schools, education, hospitals, roads, all those sorts of things that some might argue would suffer as a result.
Yeah, as you've alluded to, corporate tax collections form a large part of the revenue base in Australia. So government will reluctantly reduce that in order to shore up its revenue base. But the Henry Review was commissioned by the current Labor government a number of years ago and came up with a raft of recommendations. And really we need to look at tax reform as a whole. The first point probably needs to be looking at indirect taxes. The GST is probably your primary lever. And then abolition of some of your nuisance state taxes. Stamp duty be ideal. Payroll tax, definitely. That's a very regressive business tax, because when I have a client come to Australia and I explain payroll tax to them, I have to say, there's no logic in it. You need to just accept that you're going to be taxed for creating employment in Australia, and that defies logic. So if you abolish those, increase your GST slightly. You will have some interest groups who will say, well, it's a regressive tax GST. But to an extent, we tried to address that in 2000 with the implementation by saying that we weren't going to impose GST on some of your staples, your fresh food, health services, education. So to an extent, we've tried to shelter some of those less fortunate in society from an increase in the GST. You use that as a lever, as a broad, efficient way of collecting tax. Then you address the income tax side, so you can really change business and consumer habits on how they use this disposable income.
There's no doubt the scene's set for a serious conversation in terms of the tax system here in Australia. Look, James Tung, really appreciate you joining us this evening. Thanks very much.
No worries, you're welcome. Thank you, James.